In 2012, Shinzo Abe returned as Japan's prime minister with a mission to revive the country's stagnating economy. Japan had faced nearly 2 decades of deflation and sluggish growth following the collapse of its asset price bubble in the 1990s. These years were marked by weak domestic demand, high public debt, and a rapidly aging population. To address these challenges, Abe introduced a bold economic strategy called Abenomics, aimed at pulling Japan out of its deflationary spiral and putting it back on a path of sustainable growth. But did Abenomics truly work? Abenomics rested on what was known as the 3 arrows: aggressive monetary easing, flexible fiscal policy, and structural reforms. Each arrow targeted a different aspect of Japan's economic malaise. The first and most prominent arrow of Abenomics was monetary easing, implemented under the leadership of Bank of Japan, BOJ, Governor Haruhiko Kuroda. The goal was clear: to raise inflation and pull Japan out of its decades-long deflationary stagnation. Under the Quantitative and Qualitative Monetary Easing (QQE) program, the BOJ dramatically expanded its monetary base, purchasing large amounts of Japanese government bonds to drive inflation toward a 2% target. This was one of the most aggressive monetary easing policies in the world, and it was designed to depreciate the yen, boost corporate profits, and ultimately stimulate inflation. Initially, the policy seemed effective. The yen depreciated sharply, helping Japan's exporters become more competitive, particularly in industries such as electronics and automobiles. Corporate profits surged, and the stock market rallied, with the Nikkei stock index rising by 80% within a year. Inflation also rose, moving from negative territory to nearly 1%. However, the inflation rate consistently remained below the 2% target set by the BOJ. Despite the massive expansion of the monetary base, inflation expectations were muted. This raised concerns about the effectiveness of monetary policy in a country like Japan, where deflation had become deeply entrenched. Critics argued that the BOJ's actions lacked credibility, and that businesses and consumers, accustomed to years of deflation, were slow to respond to the new monetary environment. The second arrow of Abenomics was fiscal stimulus. In the short term, the Japanese government implemented large spending programs, including investments in infrastructure, with the aim of boosting demand and job creation. This stimulus provided an immediate, though modest, boost to the economy, with GDP growth reaching nearly 4% in the first quarter of 2013. However, Japan's enormous public debt, which exceeded 230% of GDP, created significant constraints. In 2014, the government raised the consumption tax from 5% to 8% to address the growing fiscal deficit. This tax hike, while necessary to restore fiscal balance, had a dampening effect on consumer spending and economic growth. As a result, the initial gains from fiscal stimulus were offset by reduced domestic consumption, and the economy entered a period of stagnation once again. In the years that followed, Japan's fiscal policy became a balancing act between stimulating growth and addressing its unsustainable debt levels. While the government postponed additional tax hikes, public debt continued to rise, and fiscal consolidation efforts fell short of what was needed to secure long-term sustainability. This ongoing tension between short-term growth and long-term fiscal health remained one of the key challenges of Abenomics. The third arrow of Abenomics, structural reforms, was aimed at addressing the deeper, more systemic issues in Japan's economy. These reforms focused on labor market flexibility, corporate governance, and efforts to boost productivity and innovation. One of the central aspects of the structural reforms was Womenomics, a set of policies aimed at increasing female participation in the workforce. With Japan's population aging rapidly and the workforce shrinking, This initiative sought to tap into an underutilized segment of the labor market. The government introduced measures to improve childcare availability and reduce barriers for women returning to work after childbirth. While the policies did lead to an increase in female labor participation, progress was slower than expected, and Japan's labor market remained highly rigid, with limited opportunities for part-time or non-regular workers. Another key area of structural reform was corporate governance. The Abe administration introduced new corporate governance codes aimed at improving transparency and accountability in Japanese businesses. These reforms encouraged companies to focus on shareholder value and long-term growth rather than short-term profit maximization. While there were some improvements in corporate governance practices, critics argued that the changes were too incremental and did not go far enough to transform Japan's corporate culture. In addition to labor and corporate reforms, Abenomics also sought to address Japan's energy sector, particularly in the aftermath of the Fukushima nuclear disaster. The government aimed to increase the share of renewable energy in Japan's energy mix and reduce dependence on imported fossil fuels. However, progress in this area was slow, and Japan continued to rely heavily on energy imports, which contributed to its trade deficit. One of the major limitations of Abenomics was its failure to generate sustained wage growth. Despite low unemployment and rising corporate profits, wage increases remained modest. This, in turn, limited the potential for increased domestic consumption, which was critical to sustaining long-term growth. Without significant wage growth, consumer spending remained weak, and Japan's economy continued to rely on exports for growth. As we look at the long-term impacts of Abenomics, it becomes clear that while the policies succeeded in stabilizing the economy, they did not generate the level of growth or inflation initially promised. Real GDP growth averaged less than 1% per year from 2013 to 2020, far below the 2% target set by the Abe administration. Inflation, while positive, remained stubbornly low, and the BOJ's 2% target was never reached. Moreover, Japan's public debt remains one of the highest in the world, and the government's fiscal consolidation efforts have been insufficient to address this growing burden. As the population continues to age, the demand for social services and healthcare will only increase, putting further strain on Japan's fiscal position. Abenomics was a bold and ambitious attempt to revitalize Japan's economy, but its results were mixed. The policies succeeded in boosting corporate profits, stabilizing inflation, and improving Japan's export competitiveness. However, the failure to generate sustained wage growth, the incomplete implementation of structural reforms, and the persistent challenges posed by an aging population limited the long-term success of Abenomics. But anyway, do let us know what you think. Thanks for watching.